There are a number of famous quotes that touch on real estate investing. According to Steve Bolton, the only bad time to buy real estate is later. Mark Twain once said, "Buy land, they aren't making any more of it." Not to mention, Andrew Carnegie, a well-known steel magnate, said that 90% of all billionaires became such via owning real estate. We can see that investing in real estate has some attraction. In this video, we look at the top 10 reasons to invest in real estate. Before we begin, please like this video and hit the subscribe button with notifications turned on so you will be first to know about new content. Our mission at the Personal Finance and Investing channel is to empower people to achieve financial independence. Subscribing will help us achieve that goal. Now, let's get back to today's video. Before we get into the top 10 reasons to invest in real estate, let's briefly cover the different ways to invest in real estate. There are several options. Real Estate Investment Trust is referred to as REIT. A company that owns real estate, such as offices, warehouses, hotels, residences, and retail spaces, is known as a REIT. When a person invests in a REIT, she receives a portion of these properties. It is analogous to a mutual fund for real estate. Without the hassle of managing or maintaining the physical properties, a REIT provides the benefits of exposure to real estate as an asset class and simplicity of entry. REITs provide investors two distinct advantages. First off, they constantly pay dividends to investors. Second, if the value of the REI increases as a consequence of the growth in the underlying real estate assets, you may be able to sell your investment for a profit. REITs are traded on the major stock exchanges and may be bought much like stocks or mutual funds. Residential properties. Even while buying investment properties all at once might be rewarding, it requires more effort than just buying fund shares. Investors often take out mortgage loans to pay for the acquisition, which increases the risk of the investment. Investors may make money with residential properties by renting out the land or amenities, or by selling the asset once it has appreciated in value. Long-term rentals, in which a renter lives in the property for at least 6 months, are the two main types of rentals. Short-term rentals, in which the asset is leased out for a few days at a time, are among the alternative uses for certain assets. Even while a short-term rental has far higher daily room rates than a long-term rental does, the vacancy rate is also much greater since visitors often do not book the rental for every night. The short-term rental market is dominated by two major companies that serve as marketplaces for both renters searching for a place to stay while traveling or on vacation and homeowners wishing to rent out their homes. These are VRBO.com and Airbnb.com, vacation rentals by owner. When purchasing a home as an investment, many factors must be considered. As the cliché goes, location dictates everything in real estate. This suggests that the location of the property is the most important consideration. The asset's second and third most valued components are location. For example, does the house have a lovely view? Does it have a good neighborhood and neighboring public schools? Is it in a neighborhood with strict maintenance guidelines where property prices rise, or is it in one with weak rules where property values fall? Does it have nearby amenities like parks, a pool, food establishments, and retail stores? Another aspect is how much work has to be done on the property before it can be leased out. At the very least, a thorough cleaning should be required, but sometimes, more substantial maintenance or repairs, such as replacing the carpets, fixing wall cracks, painting, replacing obsolete or worn-out equipment, gardening, etc., are also required. The first stage is a great buying price, but if maintenance and repairs are expensive, revenues will drop. Should consider setting aside some additional cash as a maintenance reserve. Another consideration are the transaction's underlying financials and potential long-term benefits. What, for example, do you expect the occupancy and rental prices to be? If the property is located in an area with a shortage of housing, the occupancy and rental rates will often be higher. There will be more occupancy if there are trustworthy employment opportunities nearby. Check to determine if there are any local tourist destinations or activities that may entice guests and persuade them to stay if the house will be used as a holiday rental. If it takes some time to locate renters for the property, you will be responsible for paying the mortgage on your own without the help of a tenant. Will you manage the property yourself or will a property manager be hired? A property manager often charges around 10% of the rental income, so you must compare this cost against the ease of having someone else take care of the property for you. You should put aside money each month to pay for maintenance and repairs if you anticipate that equipment or the property itself may need them in the future. The interest rate on the mortgage used to purchase the house has a big impact on the investment's profitability. Mortgage rates sharply dropped after the financial crisis of 2008. The average 30-year fixed mortgage rate in the US was below 5% as of 2010. It maintained a low level for more than 10 years until dropping into the 2.5% range in 2020 and 2021. Recent sharp increases in mortgage rates are a consequence of the Fed boosting interest rates to combat inflation. The typical mortgage rate is presently more than 6% as of the time of this video. This will have a substantial impact on the monthly cost. Look at this illustration. In the first quarter of 2022, the US had a $428,700 median selling price for homes. The principal and interest payment would be $1,355 per month with an average 20% down payment and a 2.5% interest rate. At 6%, this payment would be $2,056 a month. This $700 difference is a 51% increase in such a little period of time. Since rental rates have not increased at the same rate as prices, the fundamental economics of real estate investment have recently undergone a significant adjustment. Commercial properties. Another real estate investment option is to buy or invest in commercial properties. Examples include apartment buildings, shops, and office structures. Similar to a residential home, these assets may be sold for more money than you bought for them or used to produce income via rental income. The business strategy for buying commercial real estate is quite similar to that of residential real estate, with the difference that the expenses are often much higher and the agreements and ongoing administration are more complex. For these reasons, the majority of novice investors choose to pass on these chances. More seasoned investors who have the skills, resources, and ability to manage the properties often make deals. Now that we've covered the fundamentals of real estate investing, let's talk about the advantages of investing in this asset class. There are many significant ones. This corporate approach is popular among investors in part because of its reliable cash flow. In contrast to equities, which normally offer relatively sporadic income flow, such as an annual dividend payment, real estate commonly produces monthly revenue from tenants or even more regularly in the case of vacation rentals. Investors in real estate might use this to contrast the income from real estate with that from employment. If I can generate enough money each month from real estate investments, could I quit my 9-to-5 job? Tremendous returns. Historically, real estate investments have generated fantastic returns. Long-term price increases have allowed for substantial return on investment for investors. Long-term security. Real estate is often a long-term investment because of the regular monthly income streams and the investors plan to buy and hold for a very long time in order to profit from a slow and steady price growth. Tax benefits. A range of expenses associated to owning investment properties may be deducted by investors from their taxable income. Real estate taxes, mortgage interest, upkeep expenses, insurance, and management fees are a few examples. Additionally, the profit from selling the item for more than was paid for it would be considered a capital gain rather than income. Capital gains tax rates are much lower than income tax rates. In terms of taxes, investors stand to gain greatly from this. Diversification of assets is one of the tenets of investing. In other words, the investor's whole portfolio won't be significantly impacted if one industry falls. Due to the variety of businesses it exposes investors to, real estate offers diversification. When other sectors of the economy, such as the stock market, may be in decline, the real estate industry may continue to prosper and provide alluring returns. To live upon passive income, one must work a lot of overtime. Real estate requires far less ongoing labor to produce cash flow. The management of the properties by investors doesn't need much time. Automatic rent payments bring in money each month with no work required. Ability to borrow money. Stock investors are required to pay the full amount of their investment in cash when making a stock purchase. To buy $1,000 worth of shares, for instance, an investor must pay $1,000 in cash. In order to acquire properties that are more costly than they can afford out of pocket, investors often utilize finance to buy real estate. This form of debt utilization is referred to as leverage. Investors may make additions to real estate without having to fully pay the asset's acquisition price. Protection against inflation. When this video's publication date arrived, inflation was out of control. Everything has significantly increased in price, including the gas for our cars, the electricity for our home's heating, and the cost of placing food on the table. This will really be a big topic in 2022. Real estate is often seen as a potent inflation hedge. In the past, landlords were permitted to increase rents more quickly than the rate of inflation. Along with inflation, as it just did, rents often increased dramatically. While the stock market has struggled in this environment due to rising prices and interest rates, existing real estate owners often have steady expenditures for their mortgages and increasing rentals, making their investments even more attractive. Control. When an investor owns a real estate investment, they have control over it. When you work, your management is in charge of you, and you have few options to choose from when making judgments. If you invest in real estate, you have greater control over your financial decisions. Should you retain the money if you sell the asset? Should rents be raised in order to improve cash flow? Or lower rates to increase occupancy? Should you increase the amount you spend in a refurbishment that would increase rent? Or do you simply leave it as is and save time and money? When it comes to real estate investing, you have total control over your fate. Real estate is a tangible asset since you own a specific plot of land as well as the buildings on it. Since you are buying a share in an organization, stock investing is a bit more hazy. In the end, what do you actually own? What if the company in which you invested offers services you cannot purchase? What happens if the company in which you invested in shares fails? What do you possess, then? The tangible aspect of real estate affords investors a tremendous lot of comfort and security, especially in trying economic times. Let us know what you think in the comments section below. Also, let us know if you have specific topics or questions you want us to address in future videos. Don't forget to like this video and subscribe to our channel so we can help achieve our mission of empowering people to achieve financial independence. Thank you for watching, and we'll see you next time.